Looking back at the last 12 months, there haven't been too many great winners. Of course, there was Bitcoin that outperformed everything else because of the inflows from the ETFs, but among the smaller tokens, especially the meme coins, most assets went down. SPX6900 has been the clear exception. The question is, will the outperformance last? Let's have a look at some on-chain data. Let's try to figure out where the price is headed from here. We are currently at $1.26, and in the last 12 months, we went up by 8,675%. Within the entire crypto ecosystem, the token is now the 7th largest meme coin with a market cap of 1.2 billion. And that then poses the question, is there a way that we could go to the 4 billion, 5 billion, maybe even 10 billion? Because the largest of the meme coins is, of course, Dogecoin, and that's at 25 billion. Now, this is not the first video on SPX6900 on this channel. I publish videos regularly. The very first video came out 228 days ago, and it performed pretty much according to average. So the average video is here, this gray area, and that particular video is the blue line. The most recent update was made 24 days ago, and again, not that much attention. The video tended to be rather a low performer. So does this mean that we have less and less attention over time on the asset? Is this potentially bad for the price? Now, a quick journey back in time. Here's that first video. At the time, we were at 11 cents. So that was over here on the chart, just before the massive lift off, more than 1,000% in return. And meme coins do what they are best at. They are volatile. This was an 80% crash, and now we recovered again. I'm publishing videos on various assets regularly on this channel. I try to be early, try to discover what still has upside potential. Feel free to subscribe over here. But let's get back to SPX6900 and let's have a look at the buyer and seller dynamics. Who's buying, who's selling, what's currently driving the price. Here's an overview of the trending tokens on the Ethereum chain, ordered by the liquidity pool size. So how much capital is in that trending token? SPX6900 is now the third largest of the assets. Number one is, of course, Ethereum. Number two is the Pepe meme coin. SPX has now more than 43,000 holders on chain, but not all of those holders are created equal, right? Some of them might just be arbitrage bots that trade the token in very small amounts. Others might be treasury wallets that hold hundreds of thousands of dollars worth of the token. So you have to dig deeper. What we're seeing over here is the number of new users per day. On the right side, we see this normalized to 100% new versus returning users over time. We see that in the last month, there is no growth in new users that come in. It tends to rather slow down. And since the asset is already quite mature, we see more returning users than new users interacting with the token on any given day. The number of buyers and sellers is now much higher than it used to be in the early days, and it stays at that elevated level. What is also staying at an elevated level is the number of holders. So this is now the number of retail investors and the number of whale investors over time. The way you make this distinction is by looking at how many tokens are held in a particular wallet. So for the chart on the left, a wallet has to hold at least 1,000 SPX tokens. At the current price, that's more than $1,000, right? It's $1,260. For the chart in the middle, it's a 10x in minimum holding, so it's now 10,000 tokens. For the right, another 10x, so 100,000 tokens. We can see how retail accumulated massively in October and November of last year, and now they simply just continue holding. We see a similar kind of accumulation for the medium-sized holders, but the whales that didn't buy that much, relatively speaking, they're simply just holding the same kind of levels they've done for a long time. And so this is quite fascinating. If we don't see any more adoption by retail, if the number of retail investors is not going up, why do we suddenly see the price rally? Since March of this year, SPX6900 went up by more than 300%, but we clearly don't see that in the number of holders. So something else is moving the price, and I think that's leverage. More and more of SPX6900 moved from the spot market or from trading directly on chain to the bets on the price, to the perpetual futures market. So it's now the big players with a lot of leverage that push the price up and down. Here is the spot market. In the last 24 hours, we saw 22 million worth of trading volume on Gate.io. But compare this to the perpetual futures market. Here we had 95 million of trading volume. That was on Binance. And here's something very interesting. The financing costs on SPX6900 are currently negative. So most people on the perpetual futures are currently betting on falling prices. The shorts have to pay the longs in order to bet on falling prices. This is not usual. Most of the time, for most assets, we have positive funding rates. So the longs have to pay the shorts in order to get more price exposure. Not so for SPX6900 right now. The vast majority of capital bets on falling prices. And have a look at how much the perpetual futures move the price. This is how much open interest there is on the asset versus where the spot price is going. When there are more bets on the price, so when this green line is going up, then the yellow line tends to go up as well. And as we've already anticipated from the data we looked at before, now there is much more leverage in the token. So there's much more open interest, much more trading with perpetual futures. The price driver right now is not accumulation on chain. On chain, there's nothing happening. Instead, it's the bets on the price, the perpetual futures, that push the price up and down. And that matters because the perpetual futures traders, they get in and out of assets regularly. So they're just trading on the short term. Otherwise, they wouldn't pay that much for financing costs. So what goes up in interest might come down again on interest, as we have seen in the past. The big question though is, when are we going to see the deflation in open interest? Because right now there's so much short interest that there's a real possibility of a short squeeze. There's the real possibility that we could see a lot of short liquidations. Currently, we don't see them, but it might become attractive for the market makers to manipulate the price to the upside, to then see all of those forced liquidations. It's not that straightforward whether or not an additional short squeeze will happen, because the market cap is already quite high. And the larger an asset is, the harder it is to push it around. Yes, it's possible that SPX6900 could short-term go up another 50, maybe even 100%. But after that, especially if it's just for the sake of liquidations, it becomes extremely expensive to manipulate further. Yes, we have seen massive manipulation of larger meme coins in the past. For example, here, Floki Ino. But I wouldn't count on billions over billions of dollars moving into the asset just to trigger some liquidations. The most important thing to note about the price development of SPX6900 in the last few weeks is that it's not driven by retail. It's not a lot of small little investors buying up the token. This is driven by a few market makers, potentially by a few heavy whales that lever up the exposure, that use the perpetual futures, and that then through arbitrage bots also pushes up the spot price. It's a short-term bubble that at some point will deflate. Will it deflate tomorrow? Will it deflate after an additional short squeeze? I don't know, but I do not think that SPX6900 will be much higher, say in 1 or 2 years, at least if the accumulation by retail doesn't suddenly pick up again. Have a look at this. In the last year, Bitcoin went up by more than 70%, roughly 75%. But in the same time period, most altcoins, especially the smaller ones, tended to go down. So how many of those smaller altcoins actually made those 75%? It's 1, 2, 3, 4, 5. We've got 5 outperformers and 95 underperformers. And I think this is an opportunity. Most altcoins underperform Bitcoin most of the time because of token inflation. The team tends to cash out over time. Early investors tend to cash out over time. There is a growing supply with all of those vesting unlocks, and that then leads to long-term underperformance of most altcoins. And so that's how I'm currently making most of my money. This is how the community is currently making most of its money. So this is a chat where our members share their wins. We are betting on weak altcoins and we manage our risk, of course, in the process to outperform buying and holding Bitcoin. I've actually measured this for my own portfolio for the last 4 years. Had I just dollar cost averaged into Bitcoin, I would have gotten this light gray line in return. Instead, I got the black line because, again, I shorted weak altcoins at the same time. Very inflationary altcoins where early investors cash out. And when they are cashing out, we are making money as well. A lot of this extra performance was because of Balancer. So that was one of my favorite trades. This is Balancer relative to Ethereum, just long-term underperformance with very little volatility. And so I just flipped this around and I got this performance instead. We go long Ethereum, we go short Balancer. And when we do these kind of positions for 4, 5, 6 different altcoins, and we manage the risk properly, we can have nice long-term outperformance without having to rely on the next 10 or 100x altcoin, right? We don't have to find the needle in the haystack. We don't have to figure out what's the next Kipchi or the next Aki or the next ZKML. We can just turn this chart around and everything that's red becomes green and everything that becomes green becomes red, but it's fine, right? We just have to avoid the assets with too much attention. Now, of course, I'm also making dedicated videos for all the premium members. Every 3 to 4 days, I publish a premium update videos where we discuss the positions we've got open, where we also discuss the general macro environment. There are many tutorial videos as well. And if you've got the time, you can just binge watch them and improve your crypto game long term. But in the end, really what matters are only 2 main videos right now. And that's how to bet on relative valuations and how to manage risk when doing that. Because that's the downfall of many beginners. They see suddenly my win rate is high, I'm winning in 70 or 80% of my trades, and so I can just increase my leverage, I can just be a bit more loose on the stop losses, etc. And then the few bets where it doesn't play out, where we actually have a green bubble over here and we bet on falling prices, those few bets then destroy the entire portfolio. So risk management is incredibly important. If you're winning 80% of the time, but in the other 20% you're losing everything, you haven't won at all. It's not a sexy topic, but please, before you start doing any of this, watch this video first. Risk management with relative valuation bets. It's 28 minutes. So feel free to join us. It's currently $125 per month. If you sign up for the yearly subscription, we can also have a one-on-one talk. So in case you want to discuss your entire portfolio, crypto, but also outside of crypto, then we can do this for 60 minutes in Zoom. We just then schedule an appointment. So that's over here, right? You're just toggling, you get to the yearly subscription. You're also saving $250 in the process. A link to the premium website should appear directly here on screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.